Police say the duo brought in the cash from Dubai to Raipur in air ambulances on 2 occasions.
Hello and welcome, I'm Suyash Maheshwari and you are watching First Stick here on News 9, where we bring to you the morning action on the Lal Street. With me in the studio as always is Amit Ranjan. And it's a Wednesday morning and the markets, they have opened in the green. Nifty currently is holding above the 22,050 mark. The broader markets, they continue to recover well. Both mid-cap and the small-cap indices are up 0.5% this morning. And most sectors, barring a couple, are in the green. The overall setup, Amit, is looking positive for our markets this morning. But the same cannot be said about the global markets, a mixed bag, right?
Did you say green? Following a late sell-off on Wall Street, everything on Wall Street is in the red. Apple is in the red. Nvidia is in the red. And Asian markets are struggling for momentum. Hang Seng this morning is in the red, but there is news from somewhere else. But I'll get to that. Dow Jones closed in the negative at 0.08%. S&P 500 closed in the negative at 0.28%. Nasdaq closed in the negative at minus 0.42%. Stocks slightly in the slightly in the positive at 0.24% in the green. Hang Seng this morning is in the red at minus 0.80. But the news is that the yen has fallen to its lowest since 1990. Japanese stocks have basically rallied on speculation that authorities will make some moves to stem this slide, and that has shown in the stock. So Nikkei this morning is in the positive at 1.18%.
All right, and the focus, of course, will be on the reading of personal consumption expenditure price index, which is the PCE index, the preferred gauge for inflation for the US Federal Reserve. And of course, this will come out on Friday when the markets are shut on account of Good Friday. We have Easter holidays over here as well as in the US. So we'll only get to react to it come Monday. But there is clearly a vacuum as far as the Qs are concerned. It's a shorter week. We are coming off a 72-hour holiday. And actually, the markets are open for 72 hours and they'll be closed again for 72 hours. Long weekend we are coming from, and we'll go into a long weekend. But bunch of expiries lined up, and the markets, overall, while, it's not moving here or there, it's been pretty much range bound in the past couple of weeks. If you look at Nifty, it has moved in that range of about 400 points or so. On the downside, it has been protecting your 50-day moving average, which currently sits at around 21,950 mark, and on the upside, 20-day moving average has emerged as a key resistance, which is around the 20,100 levels. In fact, if you look at this morning, as of 9:30 a.m., we are very close to that 20 DMA, and time and again the markets have reversed course from this level. So maybe keep an eye out on that. And today, remember, is the monthly expiry for Bank Nifty. So expect some bit of a volatility over there. But I'm looking at the sectoral indices. Most of them are trading in the green this morning. There are a couple which are trading slightly lower. One of them is IT, and we have spoken about IT over the past week. After Accenture downgraded its revenue guidance, IT stocks took a beating, and most of these stocks have corrected by 3 to 4% in just a matter of week. And even in this morning, when pretty much all other sectors are trading in the green, it's your IT pack that's showing some signs of weakness. Nothing concerning, it's just down marginally, about 0.03% as we speak. But let's talk about bank, because that will be a focus area for the markets. And as we know, Nifty Bank contributes to about 30-35% to the entire weightage of Nifty. So it is a key driver for the markets as well. But it's trading up about 0.5% this morning. It's still struggling around that 46,800 level. Again, we have seen reversal from these zones for Bank Nifty time and again, and 47,000 is still to be topped. We have not moved past 47,000 since March 12 of this calendar. So perhaps keep an eye out on that. 47,000 is just about 200 points away, and today, as we know, is the weekly expiry. And I mean, looking at the banking constituents, Amit, I think it's the private sector banks that will be in the focus. Of course, most of them, have been laggards in the last 12-15 months, and especially the large cohort of private banks, your HDFC Bank, ICICI Bank, Kotak Mahindra Bank. But Axis Bank this morning is doing fairly well. It was one of the gainers last week as well. But with that, let's also bring on board Mr. Akshay Bhagwat, Vice President of Derivatives Research at JM Financial. Thank you for joining us here on News 9. Akshay, season greetings to you, your family and everyone at JM Financial. Let me begin by asking about, this broad range that we have been oscillating in the last 2-3 weeks now. Nifty has been pretty much hovering in that range of 50 DMA on the downside and 20 DMA on the upside. Do you expect Nifty to expire in this range, given that we are lacking directional cues both on the domestic and the global front?
Good morning, Suyash. Well, yes, Nifty, the action has been lackluster. It's been confined in a range. But one important, if you were to draw any conclusion as to how this trading would span out in the as we move on to the April series, the rollovers are pretty robust a day before the expiry, around 49-50 odd percent positive or buy positions being rolled over to the April series at a good premium. That's the first good sign. VIX is cooling off. That's another positive development. Now, for the price momentum to pick up, 22,200 is the point which you need to keep on your radar. That's an important level for the Nifty. The momentum will pick up once 22,200 gets breached. The initial feelers which we get looking at the data points is that the Nifty is preparing itself for that breakout above the 22,200 mark. So yes, I would suggest that if one is wants to take a trade in the Nifty index, follow the levels, because 22,200 has held out too far too long. And being a truncated week, last week too and this week too, as Friday is an off, there is a good chance that you might see some blowout move happening, maybe today or maybe tomorrow. But as the indication suggests, it is the banking which will be in action over the Nifty index. Probably tomorrow we may see how Nifty plays out, but today clearly the action is in the banking stocks, in the Bank Nifty's expiry day, which is slated today. So I'll be more keen on trading the Bank Nifty if it is about today's trade. Nifty overall, my feeling is take a trade on the buy side. It is still positive, but let 22,200 breach. That's the first sense that markets are regaining and gaining momentum to conquer new highs as we move into the April series.
All right, and you were talking about Nifty Bank, and of course that plays a big role. And look at yesterday's session. I mean, half of Nifty's losses came just from ICICI Bank and your HDFC Bank. And I'm looking at the price action of Nifty Bank. It was relatively insulated when the broader market correction was happening, forming doji candles all over. But we have seen this shooting star pattern, which indicates a potential price stop and reversal. I mean, it's not a classic shooting star, but Akshay, I mean, is this, because we have struggled around that 47,000 zone, we have not been able to cross it in the last 2-3 weeks. Do you expect, weakness to set in, considering also that your large cohort of private banks are just not performing?
Well, if you look at the screen today, it's the private banks who are somewhere getting back in the limelight. The Axis Bank, Kotak Bank has been strong. HDFC Bank is playing out well. And if you look at the Bank Nifty, last 5-6 days trading action, clearly the price is itself suggesting that a bottom of 46,200, 300 odd level is in place. Now, 47,000, as you rightly mentioned, is one important barrier. If you look at the heavy call writing bets which are placed at the 47,000 strike, both for today's weekly expiry as well as for the 3rd April weekly expiry, that's a significant resistance. But whenever such a high degree of open interest builds up, it is very easy for the prices to be kind of taken near the 47,000 level, make the call writers panic and see a blowout move. So that's my sense, is that 47,000 would be tested. Maybe it happens today itself on the expiry day, or maybe tomorrow. That's a slight question mark, but clearly the momentum is in the bank index today. I'm expecting levels of 47,000 to be tested and breached, and I will hold this view until we trade above the 46,500 mark. So a positive view on the bank index, expecting the resistance positions to be taken out soon. So hold your buy positions, build your buy trades, keep a stop below 46,500 on your long bets in the bank index.
All right, positive on banking index. Another stock I wanted to pick your brain on is from actually the banking and the financial space, and that's Bajaj Finance. I mean, the stock is on a 5-day winning run now. It had been struggling, Akshay, for the last 6 months, but on March 6, on the price chart, it formed a hammer formation, which again is a bullish reversal signal. And the stock has since rallied by about 10% or so, but it's still trading with a cut of about 10-11% on a 1 or 6 month basis. Considering that we are seeing some signs of reversal, do you think Bajaj Finance is out of the woods now?
Well, see, the broader or the longer term charts of Bajaj Finance are still suggestive that it's going to be in a range on a long term chart perspective. So clearly there are no directional bets which I see from maybe a couple of months holding. But if you're a short-term trader, yes, there has been a bout of good short covering in the futures and options segment. The last couple of weeks has been a rather surprise, I may say, for Bajaj Finance, because in good times when the Nifty and the indices were doing good, this was a stock which was somewhere lackluster. It was non-performing in terms of the price action. So my belief is that the momentum has kicked off in this stock. This is one of the favorite stocks from the financial sectors, which people really were kind of surprised as to why it is not moving out. But with this move which it has registered lately, the chances of the momentum to go all the way till 7,200 cannot be ruled out. So it's more of a trading bet, directional or a long medium term bet. Still, I would not be comfortable. Ride the short term bounce back till 7,200 is what I would like to take this trade on. The support is around 6,700. Buy at current rates, even if you get at slight dips of 100, 150 odd points from the current market, buy it. Your ultimate target from a trading perspective is 7,200, as I see the charts spanning out for the first fortnight of the April series.
Good morning, Akshay. Now I'll draw your attention to Central Depository Services India Limited. Now, Standard Chartered Bank has decided to offload its entire stake in the bank, about 7.18%. This despite that CDSL sales in the quarter gone by rose 44%. Their revenues, their net profits rose 37%, and the shares have been put on a discount of about 6%. The stock has performed more than almost 90% in terms of earnings in the last 1 year, but today it is down almost 4.66%. What do you make of this sale? Why is it happening, and does it augur well for CDSL, or is it's going to be a little bit of a fall for some time to come?
Well, just gauging by the price action, Amit, the sense is that, I don't see any major fall in CDSL. This stock has been in a bull run, I may say, since 2023-24, where from 900 to 2000, almost a doubler, you may put it. It's been in a time correction since the last couple of months, and today's block deal, kind of just sets it up as to whether what will happen in the near future for CDSL. But overall, the price is itself suggesting that there is no major dent in this prices going by the price action after the block deal. 1,600 is a very major support for this stock. It is the lower end of the band in which this stock has been confined to in the last couple of months. And my sense is that once the block deals, the shocks are absorbed by the market, this stock will again stage a rally as far as short to medium term goes. So if you are holding onto the stock, my recommendation is continue to hold. Once this block deal effects are done, this will again stage a reversal. If you want to take a buy trade, it is absolutely fine. Risk reward offers you a good payoff at the current juncture. Buy from the current rates to dips of 1650, or support is 1600. I'm seeing a reversal soon in this stock, which can target around 2000 from a 1 to 1.5 month perspective, and still targets may be higher if you are an investor and keen from a slightly longer term perspective. So a positive view, buy and hold, which I maintain on CDSL even after the block deal has taken place.
All right, a positive view on CDSL, price target of 2,000 rupees. I mean, the stock is down, Akshay, by about 4% this morning, but as you pointed out, it has been a phenomenal wealth creator for the markets in the last 1 year, and in fact, it has been tied with the growth story of India's financial markets. But hold that thought, we'll come back to you in just a short while. For now, time for a quick break.
$20,000 people dead and counting. What's happening in the United States of America is unprecedented. You will have to pay for this.
You were the chosen one to direct Mr. Bachchan for his first endorsement, for his first appearance on the small screen.
It was a life-changing moment.
Have you been a rebel with a cause?
There was a sense of responsibility, there was a sense of frustration.
Are you worried about cancel culture?
You tell a story with a fierce psychosis, you're gonna spoil it anyway.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
जानना है तो देखिए, समझना है तो सुनिए, सीखना है तो पूछिए, और कमाना है तो खरीदिए। जानकारी, सलाह और निवेश सब एक ही सुपर ऐप पर। पैसे का सवाल है तो जवाब है मनी 9। आजादी पैसे की, अभी डाउनलोड करें।
For the very first time in our investigation, we unmasked the killer of Ravindra Matre.
In 5G, we have to stand with the world, and in 6G, we have to lead the world.
Winning a Grammy was an absolutely surreal experience.
The football is mother of all games.
It is a team sport.
The leadership attitude is taking the ownership.
It's always a big responsibility to take decisions and the right decisions.
I always question the stereotypical.
And that's why you are in that position.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
We are trying a lot of experiments, innovations and ideas.
We came out with a new format in audio, which is audio series.
Listening for content-oriented company in India, which is a very unique proposition.
When you look at audio in general, we had music, which is like extremely old format, and then we had podcast.
A natural extension to Pocket FM is to move from Hindi to regional content. I think I'd love to see their FY24 numbers, which they claim will be close to 1,000 crores. I think there are talks of them to raise another $80 to $100 million of funding.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
Welcome back. You're watching First Stick here on News 9, and let's talk markets because we are moving higher as we speak. Nifty is actually very close to that 20-day moving average. Remember, we have been talking about Nifty being range bound in the last few couple of weeks actually, and trading in that range of 20 DMA, which is at 22,150 odd levels, and 22,160 odd levels for the 20 DMA. We are still in that range, and Nifty is actually making way towards that 20 DMA. Now in the past, as Akshay also pointed out, we have reversed course from there. We'll see how this time around the trading goes, but Nifty Bank is continuing to do well. But first let's talk about the mid cap and the small cap space, because we were seeing quite a bit of selling pressure in the first half of March. That seems to have subsided quite significantly, and look at the broader markets overall. They have recovered significantly off their lows. I think the small cap index is up almost 7% from its from its recent low. The mid cap index is also up about 6% from its low, and they have actually retraced about half of what was lost in that period of correction. So keep an eye out on the recovery in the broader markets, because I think let's talk about mid cap specifically, because it's a smaller space. It is well bought by mutual fund houses, and the overall breadth has also improved as far as the mid cap space goes. Good to see volatility also come down. Remember, we had spent a lot of time in that 15-16 zone on India VIX, but this morning, as we approach expiry, monthly expiry for Bank Nifty, which is today, and monthly expiry for Nifty, which is tomorrow, the volatility is still, in comfortable zone. 12.81 is something that, we are very comfortable with. Remember, again, we had spent a lot of time in zones of 15 and 16. So good to see India VIX at 12.81 levels. But Akshay, I'll come back to you. And we were talking about how CDSL has been an enormous wealth creator. Another stock that has delivered phenomenal returns in the last 12-15 months is ZOMATO. Now the stock is at record high levels, and the recent surge, I think, is not just sentimentally driven, because there are some fundamental triggers as well. For one, Blinkit, the quick commerce arm of ZOMATO, has hiked delivery charges by 11 to 35 rupees in certain areas of Delhi and Mumbai. So this of course will boost the top line and profitability. But coming back to the stock, Akshay, I mean, look at the returns, 15% in a matter of week. In the last 6 months, 83% returns. Last 1 year, I mean, the stock has almost tripled in that time span. What's the ceiling for ZOMATO, Akshay? I mean, rupees 200 soon?
Yeah, ZOMATO has had a phenomenal run in the last 1 year, almost 4x plus returns, you may put it. And the important technical development on the price chart is the break of the 165-170 zone. If you recollect, these were the all-time highs which we registered somewhere way back in November 2021, and break of those resistance or the prior highs with strong volumes, good block deals, just sums it up that there is still more room for ZOMATO to go from a positional perspective. As you look at the current chart readings, yes, it is a bit overstretched for comfort considering the run-up it has had since the last couple of weeks. But my sense is that this stock is possibly moving for 200 plus. The targets which the technical price patterns are projecting from a positional perspective, 3 months plus holding, would be somewhere around 230 to 250. That's the target area you should be working with. But yes, to buy at a given point, you need to approach this stock in a staggered manner. Distribute your buy positions from 180 to 160 range, because there might be some dips here and there occasionally, considering the heavy kind of overbought scenario the stock runs into. But accumulated 140 is a very strong support. This is more of a positional trade which is building out, because short term is really not more comfortable. But 230 to 250 are the targets you should be working for with ZOMATO from a medium term perspective.
Okay, Akshay, overbought but still some steam left in ZOMATO. But what are your picks for our investors today, apart from this?
Yeah. So a couple of stocks on the buy front. So SRF is my first pick, which has seen a very strong consolidation breakout. This breakout has been seen after almost 3 years of consolidation at the levels of 25.50. The momentum is very strong. Today's day is a bit off a beat for the stock, but this is a good opportunity it gives you to participate on the buy side. Accumulate this stock at the current rate of 2571. Keep a target of around 2705 to 2754 with a stop loss of 2537. That's the trade in SRF. And the second trade is Lupin from the pharma space. Again, a very strong chart structure. Again, it's a bit offbeat in today's intraday session, but my belief is that this stock should regain all the way till 1671 to around 1697 on the upside for the April month. So buy Lupin for the given targets with a stop loss of 1587.
All right, that's Akshay Bhagwat for you. SRF and Lupin are on his radar for the short term. Akshay, Always great insights from you, sir. Thank you for joining us here on News 9. Well, moving on, and we were talking markets because Nifty continues to do well and it's moving higher. We are again very close to that 20-day moving average. Remember, that has been a point of reversal quite a few times actually in the last couple of weeks, but the broader markets, I mean the overall texture of the market is different. Remember, whenever we were reversing from that 22,150, 170 odd zones, the broader markets, they were reeling under pressure, but they are participating on the upside. Both small cap and mid cap indices, they are up significantly from their respective recent lows. The mid cap index is almost up 6%, as I mentioned earlier. The small cap index is even doing better. It's up almost 7.5% from its very recent low. We have a bunch of expiries lined up. Today, of course, is Bank Nifty's monthly contract expiry, and tomorrow is Nifty contract expiry. But I'm looking at Nifty Bank because 46,800 is where it had struggled with in the past few sessions, in fact in the past couple of weeks, and we are closing in on that 47,000 mark. Akshay also mentioned, since March 12 we have not conquered 47,000 on Bank Nifty, so that will be a critical level for us to track. And I think what would work out in favors of bulls is that the big large private banks, they are also participating in the upside. I'm looking at HDFC Bank, ICICI Bank, Axis Bank, all of them are trading in the green. In fact, they are the the highest contributors apart from Reliance for all the upside that is coming for Nifty this morning. So keep an eye out on Nifty Bank. 47,000 is where the ceiling has been in the last couple of weeks, but the large banks, they are performing. HDFC Bank, ICICI Bank, Axis has continued to do well. Kotak is also in the green this morning, so keep an eye out on that. Let's also look at some of the other sectors which are trading in trade this morning, because most of them are trading in the green. I'm looking at FMCG. It's down, it's actually flat this morning. It's down about 0.01%. And Amit, we have spoken about this weakness in the FMCG pack overall, because we have seen that the companies have been able to improve their profit margins quarter on quarter, because they have seen easing of raw material prices. But consumption, Amit, that has been lacking. Volume growth is not there. Rural demand is not there. What's weighing on FMCG?
The consumption has been lacking primarily because of the numbers that are coming from the rural areas. So that is, but the upside has started. I think the worst, we have spoken about this last few days also, and our experts also believe that the worst is over and it is only upside. And FMCG is a sector which analysts are betting really big on in the run up to the elections and post elections.
Right.
So that it's bit of a a downturn that happened in the last year. While the bulls were reigning, the FMCG was a little bit of a low. But I believe I along with what the numbers tell us, the worst is over. Even the big names which were giving very low returns, HUL included, are now on the upswing.
And talking about some of these consumer staples like your HUL, I mean, the IPL season is on. A lot of us are sitting home watching matches, ordering online. I'm sure that is going to benefit companies like your HUL and consumer staples. But FMCG is such a wide space, and we are expecting monetary easing to start within the next few months, maybe not April, but later in down the year. We are expecting rate cuts, and that should positively impact some of these FMCG stocks, because this will of course increase the discretionary earnings of the common man. But I'm made to believe that Avinash Gorakshakkar, Director Research at Profit Mart Securities, has joined us. Thank you for joining us here on News 9, sir. Season greetings to you, your family and your team. And I want to begin by asking about what sort of a feeler are you getting from the market right now, because Nifty has been pretty much range bound in the last few weeks, and although it has held above 22,000, and the mid caps and the small caps, they are recovering. But if you look at the overall breadth of the markets, that is still favoring the bears, and the large caps, sir, they are lacking leadership. What's your sense of things as we stand?
Yeah, I think good morning, Suresh. My sense is, I think the markets are likely to bottom out in the month of March. And I think March has always been a month where we have seen a lot of volatility, largely because, People file their return. There's a lot of tax harvesting which is done. My sense is that post March, the markets would start discounting the kind of schedule of elections which has already been announced. And more importantly, you're right in saying that the large cap are still lagging, the smaller and the mid caps and the broader markets. This is because, I think clearly the expectations of retail investors are slightly more aggressive. If you look at the kind of returns small cap, mid caps have given in the last, say, 12, 15 months, I think clearly large cap have lagged behind because the alpha creation has happened only in the smaller and mid cap category. Of course, there are some good large cap companies, like Mahindra and Mahindra, HDFC Bank, typically a stock like Cummins, L&T. So these are all, companies where you could expect steady to moderate returns. And I think where the safety of capital is very important. My sense is that large caps also will start moving, hopefully once the elections are over. After the elections, our expectation is that you could see a rate cut cycle starting soon, not only in US, but even in India. And I think that would be a key trigger point. So I think, what we are getting to know now is that there has been some heavy selling in the month of March due to tax reasons. And I think clearly small cap and mid caps, which are into euphoria kind of zone, have now corrected significantly. So obviously, some bottom fishing is being done. But broadly, I think a combination of large cap and mid caps could still provide a decent alpha. And hopefully after June, I think the markets could now hopefully get further re-rated. So I think fundamentally markets are in a pretty good shape. Today we got the CAD numbers, which are also encouraging. So I think that clearly shows that, the economy is on a strong wicket, and hopefully the second half of FY 24-25 is going to be definitely much better than the entire fiscal of FY 24. So I think earnings growth coupled with a lot of liquidity from the FIF is definitely going to keep the markets in action post the second half of this current year.
Mr. Gorakshakar, now you spoke about economy is in a good shape. It definitely seems so, given the numbers that FIIs have put into equities in the month of March. It has been the highest buying binge since December 2023, 3.63 billion. And if we look at the comparison with other Asian economies, India is by far the leader, way ahead of South Korea, Japan and Indonesia, where the buying binges have happened when it comes to foreign institutional investors. My question is twofold. One is, what triggers this buying spree just before elections and general elections in India? And two, the darling of the Asia Pac, one of them used to be Vietnam, which seems to, the money has gone out of those stock markets in the month of March. What explains that?
No, I think clearly, I think markets are looking at the fact that post-elections, the markets, hopefully the kind of performance the ruling government party maintains, the markets could see a sporadic increase. In fact, this was the same scenario we saw, when we saw the last election. And my guess is that, FIs are preempting that the current government would continue. They would come with a solid majority. And I think that's the reason a lot of preempt buying has been happening across large, sectors like automobiles, auto components, capital goods, cement, in fact, real estate also. Most of the domestic themes are in flavor. I think even as of now, export-oriented companies are slightly under a cloud. Although I believe that most of the negatives have been factored in sectors like, IT. But I think metals are continuing to be quite volatile. So the reason why FIs have been putting money in huge numbers is because they find that now India is one of the most promising emerging market. And I think once the new government comes in, the new budget is announced, I think a lot of focus and thrust will be put on economic policies. And I think that is what most of the FIs and the local funds are looking forward to. I think earnings growth is definitely going to be much stronger in FY 25. And hopefully, if interest rates come down, that is something which is going to further add to the corporate profitability of the entire Indian corporate sector. So I think, these are typical tailwinds which I think are playing out. And I think markets are very clear that in this election period, there would be a lot of volatility both on the upside and the downside. But as the election nears and obviously as the final results come out, you will find that the markets will settle down and definitely, trend upward. So I think FIs are looking at buying good value at reasonable valuations, looking at the next 2 years.
All right, FIIs are looking at buying at a good valuation. And so you mentioned about, current account deficit coming down. That has certainly narrowed in Q3. It stands at 10.5 billion in the December quarter, which is about 1.2% of the GDP. This is, by the way, significantly lower than Q3 of the previous fiscal, where the figure was at around $16.8 billion. Now, this of course, sir, is positive for the economy, for the bond market, for the rupee as well. But this was during the period, the softening or narrowing of CAD was during the period when the crude prices were slipping. They are back on the way up again. I mean, could that lead to a much bloated figure in Q4?
See, I think, Suyash, it's very difficult to forecast, crude prices in the short term. But my guess is that, crude prices, if they remain at the current levels, then I think we are pretty safe and comfortable. If they go up by another 8-10%, then I think obviously the number could be a little, bad for the CAD in the fourth quarter. And I think at least initially the signals are showing that crude prices have been elevated. It all depends on how global supply for crude, shapes up. We have been hearing a lot of news that Russia has controlled supplies, and that is the reason, obviously, the oil price in the very near term has, gone up. So I think we'll have to wait and watch. I think, my sense is that crude prices, if they go up, that would have a negative impact not only on the CAD but even on inflation. Because and obviously on many sectors, because a lot of sectors depend on crude as their basic raw material. So I think we'll have to wait and watch. But I think post June, July, I think we should be having a better idea about how the crude market forms. And that is a time when I think one could take a conclusive kind of action on the, on all the stocks which I mentioned. Clearly, because domestic themes are now going to be more important. Of course, the export-oriented themes, the import-sensitive themes would be under constant radar till the month of June, as crude plays out.
All right, crude prices will be key for us to track, but we'll need some time for the dust to settle, let some clarity come in. But as Mr. Gorakshakar said, we are not in the uncomfortable zone yet. We are about 10% away from it. And Brent crude, by the way, currently is at $85 a barrel. It has slipped, by about a couple of dollars in the last couple of days. So that's good to see. That's also a sentimental booster for our markets in the near term. But Mr. Gorakshakar, always great insights from you. Thank you for joining us here on News 9. But with that, let's wrap this edition of First Take. We'll see you at 4 on Last Take. But up next, World Business Report.
Currently, the industry is facing a lot of challenges as far as demand is concerned. Basically, the US markets has slowed down because of high inflation,